I'm Ike Namba. Welcome to news updates on SOUQ News. The Nigerian Senate has passed the Student Loan Access to Higher Education Act Repeal and Reenactment Bill 2024 in response to the federal government's request to repeal the existing Student Loan Act and enact a new one. The decision follows the consideration of the Senate Committee on Tertiary Institutions and TET Funds report presented by Chairman Senator Muntari Dandutse during plenary. The new act aims to enhance the implementation of the higher education student loan scheme by addressing various challenges, including the management structure of Nigerian Education Loan Fund (NELF), applicants, eligibility requirements, loan purposes, funding sources, and disbursements and repayment procedures. This move comes after the temporary suspension of the student loan system was announced, intended to provide Nigerian students in tertiary institutions with access to low-interest loans to complete their studies. Operators in the parallel market are now quoting a buy price of 1,400 naira to $1 for individuals looking to sell dollars, indicating a notable strengthening of the naira. Recent checks reveals a surge in the exchange rate attributed to spectators offloading their dollar reserves amid this decreasing demand. Sources within the parallel market confirmed the naira's rise from around 1,600 naira to $1 to 1,500 naira per dollar for selling transactions, while they buy at 1,400 naira to $1, allowing them to profit with a spread of 100 naira to $1. Traders express satisfaction with the stronger naira, highlighting its positive impact on business. Meanwhile, the official market records a decline to 1,500 naira and 60 naira to $1 on Tuesday, the strongest performance since March 4th. These developments coincide with the central bank's upcoming monetary policy meeting, where decisions on interest rates will be deliberated alongside factors such as foreign investors, participation in OMO auctions, and treasury bills, which have contributed to recent naira gains. Senegal is set, to proceed its postponed presidential elections on Sunday amidst heightened political tension as President Macky Sall's attempts to delay the vote have failed, with two key opponents were recently released from prison. Support for Saleh has waned during his final term, marking a departure from Senegal's typically stable democratic landscape. For the first time, the incumbent won't be on the ballot, with the ruling coalition nominee Amadou Ba, former Prime Minister and Finance Minister, expected to uphold investor-friendly policies amidst preparations for Senegal's transition to an oil and gas producer by 2024. However, Ba faces stiff competition from 18 opposition candidates, notably Bassirou Diomaye Faye, propelled to prominence with support from firebrand opposition leader Ousmane Sonko. Bank of Canada governors reached a consensus earlier this month that conditions conducive to rate cuts should emerge in 2024 if the economy progresses as forecasted. This statement, outlined in the minutes of the March 6 rate announcement deliberations, marks the first time the central bank has officially indicated a specific timeline for potential rate reductions from the current 22-year high of 5%. However, the minutes also unveil a division with the 6th rate settling governing council regarding the timing and sufficiency of evidence for implementing cuts. While Governor Tiff Macklem emphasized that persistent underlying inflation warranted no immediate rate cuts, the council expressed unanimity in events of economic evolution aligning with the bank's projections. Despite weak first-quarter growth, the Bank of Canada anticipates gradual improvements, forecasting 1% annualized growth by year-end. Inflation is projected to hover around 3% in the first half of 2024, easing to 2.5% later in the year, eventually returning to the bank's 2% target in 2025. Italian Economy Minister Giancarlo Giorgetti, says the fate of former phone monopoly Telecom Italia, TIM, now rests in the hands of the market, signaling a shift away from government intervention. The minister stated during a parliamentary session that the state has fulfilled its obligations, leaving it to market forces to determine the company's future direction. This statement comes as TIM pursues a $22 billion deal to sell its landline grid to KKR with the aim to reducing its debt burden. However, doubts have emerged regarding this plan, affected by a recent decline in TIM's shares following a financial target presentation. That's our news, our package on news update for now. Stay tuned. SOUQ News for more business and development from Nigeria and around the world. Ciao.